Rana Foroohar, some of you know from previous appearances here at the Asia Society, supremely qualified as we turn our attention now in this iteration of the Asia briefing to the economies of Asia. Rana said very kindly yesterday, we can ask her anything about the entire global economy, but we're going to try to focus in a little bit, even though we have a full hour on Asia, and even that is a giant area to mine, of course. Rana is global business columnist and associate editor at the Financial Times, where she also just said that the FT is a perfect match for her wonky DNA. So take that for what it's worth. She's also CNN's global economic analyst, and she's won multiple fellowships and awards for her work, you can see in the program. And she's the author, most recently, of Makers and Takers, a book about what she calls the financialization of America. You can get copies at the back if you've not already done so. And Rana, welcome back to the Asia Society. The way we'll do this morning, as we typically do, is we'll invite our guests to say a few words of introduction. I might ask a question or two, but then always better, particularly when the subject is global finance, for others in the room to take the bait and ask the question, and we invite your engagement. But for now, Rana, the floor is yours.
Thank you. Thank you. Thanks so much, Tom, and thanks for having me here. This is always one of my favorite venues to come and speak. So Tom had asked me just to pull back and kind of give some perspective on where we are right now in the global economy in terms of economic growth. And so I'll do that quickly, which I'm pleased to do, because for the last few years when I come do these things, I have mostly bad news. And now I actually have some good news. The latest OECD numbers are actually out today. And things are looking pretty good. The global economy had about 3% growth last year, which was certainly far from the record highs that we saw before the financial crisis, but, it was respectable. This year we're looking like 3.5%. 2018 we're looking like 3.7%. And that's underscored by a few different things. The U.S. is in recovery, although I will caveat that by saying it's still the longest, slowest, weakest recovery that we've seen, and I think there's a lot of issues with that, which we might get into. Europe has interestingly become a bright spot. Europe is going through a secular recovery, but there are signs, given the election results in France and in Germany, there are signs that Europe is kind of getting its mojo back, that it hasn't fallen to populism as many people thought that it would. I think midterm there are still, and long term certainly, there's still some questions in terms of European integration, how far it goes, what the structures of that will be. But it's a good moment because, of course, following Brexit, everybody thought this was the end of Europe, there was going to be a fracturing, we might see the end of the euro, and that really hasn't come to pass. Asia is doing well, too. Of course, you can never speak about Asia or the emerging markets as a single block, but I will say that the fundamentals in a lot of these markets are a lot stronger than they were 10, 20 years ago, and I think that you're really seeing that now. China is in a recovery. I think that, like the U.S. recovery, it's been one that's been manufactured in some ways by easy money, and it's now very important that it segue into something that has more of a kind of a main street effect, and we can talk a little bit more about that too. A lot of people are becoming very bullish on India. India is kind of the constant also-ran to China. It's always going to be India's moment next year, the year after. But I think that people are really starting to look more closely to India, in part because of growing political risk in the region. The situation in the South China Seas, the situation in Korea, suddenly, relative to China, India starts to look like a more interesting bet. So that's sort of where things stand now. I think that we're in a short-term bright moment. I think the next couple of years are going to be putting aside all the potential horrible political things that could happen, which I'm sure we'll talk about, all the red herrings or black swans or whatever they are. Got my metaphors wrong. But medium term, there are still some structural questions. How is Europe going to evolve? How is China going to transition out of being a poorer country through the middle market trap? I think that's something that Tom and I are going to talk a little bit about. And how is the U.S. going to really overcome the partisan populism that we've seen of the last few years, I think that there are risks that that could be worse in 2018 and 2020, and what will that mean for getting any kind of positive legislation through. So I'll just stop with that. Maybe we can jump in.
Thank you, Rana. I will come. There was this middle-income trap question was raised at an event we had up here yesterday, and I'll get to that in a second. It's a pretty specific question. I thought I'd start, though, with what in my old life in television we used to call a dumb viewer question.
Never.
And I'm
never dumb.
And I'm happy to play dumb viewer here. If a consumer, even more than just a casual consumer of news and current affairs from the region we pay attention to, sees really nothing but well, not nothing, but sees a tremendous amount of uncertainty, and that's obviously manifesting itself most blatantly, I guess, at the moment with not just the Korean Peninsula, but the potential for spillover. Even if there isn't a conflict, we always hear that uncertainty is the worst thing for investors in markets and the like, and that has, that situation has a Japan problem, a huge China problem potentially. And then I won't enumerate all the other issues and flashpoints and hotspots around the area, but the flip side is all those metrics and numbers and World Bank reports and markets and everything else, and you'd never think that these things were in play. So my dumb viewer question is, what's going on here?
Well, that's the $35 million question.
It is? It's not a dumb viewer question?
It's so not a dumb viewer. The dumb viewer questions are never dumb viewer, for starters. The dumb questions are always the best questions. But no, this is something that a lot of us that watch the markets have been fascinated by, puzzling over for years now. There is a tremendous amount of political risk out there. You can point, just the obvious issues of Korea, China, the U.S., there are 100 more you could name. Venezuela, Morocco. Any number of other countries are having big economic and political issues almost wherever you look in the globe, but the markets are not reacting. And I actually think there's a very clear reason for this. Political events are not liquid. They are one-offs. They are things that the markets have no way to understand or price. A lot of big hedge fund guys, Ray Dalio, some other folks have been writing about populism, trying to understand it. Some people have actually been rejiggering their portfolios to try and hedge against the risk of extreme politics. Interestingly, Ray Dalio, who runs Bridgewater, put out a note saying that he was moving some of his portfolio away from U.S.-based political risk. So it's not so much Korea necessarily that people are trying to hedge against, but just the partisan populism that we've seen in so many developed countries. So that's point number one. Point number two, what are the markets reacting to? Why are they at record highs still? They're reacting to the actions of the global central bankers of the world in the last 10 years. So if you look at the amount of money that the Fed has poured in, $4 trillion in the last decade into the markets. Globally, central bankers have put in $30 trillion. That is totally unprecedented. And it naturally inflates the markets. It naturally pushes people into stocks and riskier assets. That's what it was supposed to do. I would argue that we have really reached levels where that asset bubble has become a risk in and of itself, and we can maybe talk more about how that might play out globally and in Asia. But that's what the central banks were left to do, in part because there was so much polarization in political capitals in Washington and Brussels and many other places. So you couldn't really get the kind of fiscal stimulus or sort of real Main Street effect that you might have if politics had been in a different place. So Janet Yellen and her team came in, and this is where we are.
Sure, jump in. And please, anybody, this is informal, just pop your hand up and we'll get,
So Rana, on the point about why the global markets are sort of immune to what we see on the political risk side, my perspective is that state capitalism is less important and entrepreneur-led. You look at the big companies in China and India that are really driving. It's really entrepreneur-led. Any thoughts on that?
Well, I'm sort of fascinated by the mix in China right now. I agree with you that the private sector seems to be having a resurgence. There's a lot of exciting new companies in the tech space, for example. But I also think that there's an interesting mix of while some of these companies are not controlled by the state, there is some state direction and some state control over how they behave. And I'm fascinated, for example, by how the policy seems to be to push a company like Alibaba, for example, to build out rural broadband. That, to me, is fascinating when you compare it to the way the tech ecosystem is developing in the U.S. because we have, totally relatively unfettered markets, winner-take-all system. There's, one of the things I've been covering at the FT a lot is big tech because I tend to go where the money and the power is, and right now about 80% of corporate profits in the U.S. are held in about 10% of corporations, the IP-rich corporations. The same thing is true in many other places. I mean, it's interesting, in China, tech is about 25% of the weighting of the markets, same in the U.S. So the tech story is really driving the economic story, both in Asia and in the U.S. But Asia, and in particular China, is taking a very different approach to how they think about the tech ecosystem. And easier to do it in an autocratic country, for sure. But I think that there are some things that I would be watching very closely. I think it's very important as we build out a digital economy that it not become a monopoly situation, that it not become a winner-take-all situation. You have to make sure that you bring small businesses, mid-sized businesses into that space. And there's actually a huge opportunity because the trade debate, if I can just segue into that for a moment, because it's sort of related. We hear a lot of negative stuff about the trade debate. Trade in goods and services has been flat for the last 3 to 5 years. Based on various metrics. But digital trade is up 45 times in the last decade. And digital trade actually, if you're a small and mid-sized business, it's easier to take part in global digital trade. So that's a real opportunity if we can get the policy structures right. I'm not sure we are getting them right in the U.S. I do think that this idea of Beijing, insisting as a quid pro quo that some of the richest companies actually do this part of building out broadband and getting, parts of the country that are not online is a great thing.
You mean when you put out that digital trade figure, you're talking cross-border?
Cross-border, yeah. Cross-border flows of information, e-commerce, search, video, any kind of digital information. So,
again, take your questions when you have them. I do want to come back to the promised middle income trap question. So Evan Medeiros, some of you may know, was on the National Security Council at the White House until a couple of years ago. And he was among our guests at an event which was very China-focused, as this event is so far, and understandably so. And he said that China is in great danger of falling into what's known as the middle income trap and may find itself stuck in it soon. It's been floating, I'm looking at my notes here, at what it means is per capita income between $1,000 and roughly $12,000, and it's been in that space for 25 years. South Korea, Taiwan, and Singapore, before they moved to where they are now, spent respectively 23, 27, 29 years in that band. And the trap is basically a theory that if you don't get out of that, your avenues for further growth dry up and wages stagnate. And what Evan Medeiros said here was, quote, China in the next 5 years needs escape velocity. It really needs to pick things up if it's going to make that jump. So, how would you handicap that, and what does China need to do to make that happen?
So it's a great question. The middle income trap has been particularly hard to get out of in Asia. As you point out, only a handful of countries have done it. It's always the most difficult point of a country's economic development because you basically have to go, and speaking in very rough terms here, from sort of commoditization, manufacturing, state-led investment to a more of an innovation culture, a consumer culture. You have to come up with your own IP. You have to create higher income white-collar jobs. You have to shift your education system and the sort of public infrastructure to make that happen. So that's what China's trying to do right now. Now, to buy itself time after the financial crisis, the Chinese, like everybody else, dumped a lot of money into the economy. So when he says they have to achieve escape velocity in 5 years, I'm assuming he's referring to the risk of a debt bubble bursting and creating political unrest before then. So just to give you a sense of China's debt bubble, which I think a lot about, I think it's very important, prior to the financial crisis, it took about $1 of debt to create every dollar of GDP in China. It now takes $6 of debt to create $1 of GDP. So that is a really eye-popping figure. It's actually I think, in terms of velocity, the biggest debt bubble that we've ever seen created. Kind of makes, Arizona and Florida housing markets seem small by comparison. So that's the risk. How is that debt bubble going to be managed? Now, obviously, when you have a state-run economy, there are things that you can do. You're already seeing defaults at the local level, public bond issues, some companies in riskier sectors having problems, and the state sort of managing that. But if there is a bigger trigger for some problem that then, of course, causes social unrest, that becomes a bigger issue. So 5 years, how do you deal with that? Well, there's a lot to do. You have to, start by creating your own IP and moving companies, particularly in strategic sectors like tech, the strategic green sectors, green cars, batteries, things like that, higher up the food chain. And I think that you're starting to see signs that China is building an infrastructure around that, tighter IP protection. It's fascinating because the U.S. has actually weakened its patent system over the last 15 years or so. China has strengthened its patent system, which is starting to have an interesting effect. I actually hear from some investors in Silicon Valley that they're starting to put more money in China and other parts of Asia relative to the U.S. because they feel that they're going to be able to get good patent protection. So that's a big shift. Education, I think, is still a real challenge. I mean, it's a challenge, here too, but creating an education system that doesn't just churn out young people that have been trained in a rote way, but really churns out people that can think creatively. There's been, I think, a little bit of a mythology developing globally, really, around the importance of STEM education. STEM is hugely important, no doubt. But creative thinking is really what's incredibly important because the robots, the software are going to be able to do a lot of what engineers, even highly paid engineers in Silicon Valley or in Shanghai or Shenzhen do now. So it's really important to revamp the educational system. And then the question is, what will the political structures have to be around that? How much loosening will have to happen in order to breed that kind of creative class?
There was a question in the back and then here. And if you could just say who you are. And if you can push the button on your little thing, it'll light up and we'll hear you a little bit better.
Okay, my name's Jim Altschul, and I very much enjoy reading your columns.
Thank you.
Do you have any thoughts on the likelihood for success with regard to Japan's efforts to reconstitute the TPP without the U.S. and also there's another China-led trade agreement that's germinating? Any thoughts on those two things?
I think that both of those things are moving ahead. I would put my bet on China being the leader of whatever new trade agreement does get crafted. And I think it's a huge loss for the U.S., as I'm sure many other people do, that we've come out of that conversation. I mean, it's just and our trade debate. I will say the other thing. I think our trade debate with Asia was flawed and difficult for many reasons and sort of conflictive, but we didn't even get the topic matter right. We need to be, again, talking about IP, talking about digital trade. We got caught in sort of old line wrangling about stuff that in 5 or 10 years isn't going to matter so much. So that's my take on TPP. And
what about the Japan? Is that the front end of your question? I mean, do you think that there's the regional agreements, are they going to move forward no matter what the United States? I think
the regional agreements will move forward. I think in part because a lot of Asian countries, view China both as an opportunity and a threat, right? And they're trying to hedge their bets by deal making in as many ways as they can with as many possible partners.
Thank you.
Thank you very much, Rana. Mimi Zhou from Hong Kong, but currently at Columbia University.
And excuse me, I have to interrupt. And a sterling member of our Asia 21 Young Leaders Network. Welcome, Mimi.
Thanks, Tom. Picking up on that sort of point about sort of China's political sort of status within the region and the world, I'm just very curious of your thoughts on sort of the next steps of the One Belt, One Road. And on the point of sort of getting out of the middle income trap and the next step in China's economic growth and development. I'm just wondering whether you have also any particular insights on the impact of this growth on sustainability issues. Because, I go to Beijing all the time, and the last trip I just had to get this massive mask because I could barely breathe, and everyone, my colleagues there are always complaining. So I think there is a cost of growth that we have to recognize that China is painfully going through, the impact on sustainability and then the social dimensions of growth. So, but I absolutely agree with you about the education bit. As an educator myself in China, really do see big flaws in the education system that tries to get Chinese students into that critical and independent thinking, which I don't blame Confucius, but, it is. So thank you.
That's that's fascinating. It's telling that white collar unemployment is higher in a lot of places than blue collar employment in China, which tells you that leap hasn't been made yet, and the educational system has not been fixed yet. So to take the point about sustainability. Absolutely agree. I'm going to be in China right after the party conference, actually, and I'm already kind of prepping myself. I have to drink tons of water, and I have a whole pollution regime that I have to undertake when I'm there. I hear from a lot of CEOs actually that's becoming an issue for them locating assets in China and certainly locating talent, but it's becoming a hardship destination in the sense of just livability of Beijing in particular. So I think it is a huge issue. I think the fact that from a top-down economy that hasn't been better dealt with yet, with the small exceptions of, around the time of the Olympics, you get these rulings coming down to cut pollution, et cetera. I think that really speaks to just how hard it is to overcome this middle income trap. Because, of course, getting over that trap means moving from a manufacturing economy, moving from a high polluting economy to something different. And that's clearly not happening. And it's interesting. It's almost like the pollution on the coast is an economic indicator of how fast that shift is happening. So I think that it's a good thing that the Chinese are taking various sectors like the green energy sector. They've done a lot with subsidizing solar panels, wind energy, green batteries. I think that those are great steps, trying to both own those industries and then deploy them at home. But you still see a tremendous number of old line, cold, very badly, not newly refitted coal-fired power plants. In the country, so huge issue. It's funny, I spoke to a guy recently from the AFL-CIO who had gone on a trip to China with his boss who had been a U.S. coal miner, and he was in some of the coal region in the center of the country and some of the coal mines, and he said that the standards were from the 1950s. It was really a lot of work still to be done. The second part of the question was, One Belt, One Road. Yeah, I think that is going full bore, particularly with the U.S. pulling out from a lot of the areas that China is looking to go into. I think what I'm very interested in is what impact is this going to have in the Middle East? I recently had an off-the-record with some Iranian officials that were very interested in what they were doing with China around these things, around energy consumption. I think you're going to see more interest in the Middle East from China. Less willing or not willing, I think the U.S. is probably going to pull back some from the Middle East. Energy-wise, the U.S. is producing more energy. China is consuming. That's going to put them into not only the Middle East but West Africa. And it's an entirely different landscape, both for economics but also for diplomacy, because the Chinese have a very different way of dealing with these nations than the U.S. did. So
can I just, yes, go ahead, sir.
Hi, Derek Olson with the World Affairs Council of Oregon. I was wondering, to what extent do you see the security issues in the South China Sea and Korea Peninsula and others affecting economic growth and engagement within the region and with the U.S.?
It's a really big deal. It's one of these things, too, where every CEO I talk to, and I actually recently spoke to a group of supply chain executives, every single one of them has a contingency plan for what happens if there's a blockage. Because as you know, 80% of the world's trade goes through that region. So everybody's got their backup plan. There's no major shift happening right away, but I think that the problems in that area are just one factor that is pushing countries to think about localization and regionalization within trade, which is something that was happening for a lot of reasons. When energy prices were higher in the U.S., there began to be an interesting recalibration of, all right, are you going to send something on a container and take it 6 weeks from China, or are you going to work with Mexico, or are you even going to put new factories in the south of the U.S. where labor costs are lower? There starts to be a very interesting new arbitrage around labor, energy costs, and political risk. And I think that will just, continue to grow. And in part, it serves in a somewhat useful way. It serves national economies. It helps them to talk about creating jobs at home, move away from the outsourcing debate. I think we're possibly going to end up with regionalization, sort of an Asia hub, a Europe hub, and a North America, Mexico, U.S. hub. Assuming that our great leader doesn't screw up anything on the Canada-Mexico front, and we'll see. But that would be a natural thing to do economically.
I want to burrow a little bit more into Mimi's maybe observations or perhaps questions, or maybe a little bit of both, because it strikes me that although they're utterly different subjects, Belton Road and China's sort of future as a great wind, solar, sustainable energy producer, whatever. They're both cases where, depending who you're talking to, where you are, you can have such absolutely diametrically different.
Yes.
And I mean, even just sitting here on Park Avenue at the Asia Society, we've done big events on Belton Road, and I probably don't need to tell you this, but you will hear an incredibly rosy, bullish assessment, not just from the Chinese, by the way, but people who say, look, at least they're doing things. At least they're in the infrastructure space. At least they're trying stuff. They're throwing spaghetti against the wall, and who cares if only 1 out of the 10 things, right? It's such a grand scale. And then you have the other people who look at the plans and pick through it and say, this isn't going to fly. You can't build a pipeline through this part of Central Asia. Are you nuts? Who's going to finance this? It's not, So just that's an observation, but I guess it's also, do you find the people you talk to, are they bullish on this? Do they think it's a big question, but it's
a fascinating question. I would say I speak to a lot of high-level investors about this very point. Do you believe in the infrastructure efforts? Do you believe in One Belt, One Road? Do you believe in China's economic trajectory? I would say it's split literally down the middle. I really do. And it just makes me feel, every time I'm in China, I feel I could write the story either way. And sometimes I could write the story one way on Wednesday and a different way on Thursday. So I think it's extremely risky. I mean, it's a big country, just like the U.S., with lots of different stories, right? It's not unidimensional. The thing that worries me more and that I don't see an easy solution to is this debt problem that we spoke about earlier, because it's so much about the underlying structure of the political economy and power in China. So, still really, you have a system where the amazing savings of the Chinese people are put in state-run banks that then lend out money largely to state-owned companies. The private sector, even though it's quite vibrant, gets much less official capital. And that goes into, some things that may be productive. Surely there is still a lot of infrastructure building to do in China, but certainly there's also some bridges to nowhere. I'm sure we've all been to cities with lots of luxury condos that are standing empty. And that system is the richest 1,000 people in China are all connected to the party. Breaking this system will require just a massive shift of invested interest. It's not happening in this country. It's going to be very difficult for it to happen there with a system that, while more controlling, is also more fragile in some ways because of that, I think.
So just to that other story that you could write two ways.
Yeah.
Totally get Mimi's point about, the masks and your point about CEOs making judgments about the pollution and everything else. Actually, at one of our young leaders' conferences, it was in Zhenjiang in southern China. It wasn't even in Beijing. And it was a wonderful few days, but a wonderful few days in which we didn't go on any of the excursions, hardly left the hotel.
Yeah.
I mean, it was really, really, by all those metrics, it was about as bad as it gets. And I think it was Tom Friedman who said, China may lead the world in all these metrics of of growth and whatever they're doing with all their with Belton Road and everything else like that. But if you are at the top of the metric that says the cities nobody wants to live in, then you have a big problem. But then again, the other story, I have to say, you visit some of these business people, investors, even, there's a burgeoning environmental movement, probably for that reason in China. And I come away thinking that the odds of major success and progress in wind, in solar, in electric vehicles, and everything else, I feel like, and I don't know anything about this, by the way, but I feel like I'd be more bullish on that succeeding in China than here.
Totally. And why do you say that, Frank? I'm curious.
Well, China will surpass 1 million electric vehicles, new electric vehicles this year, and I think that number is going to grow very, very dramatically. And I think, they have been investing a lot in alternatives. And yes, some of the old stuff has to go away. I think the other thing you have to look at is that a lot of what happens in China is not state-run, it's regional. And a lot of the debt is at the city level. Each city, kind of runs itself in its own way. But I think when they really get their act together and decide to do something, and I think that the environment is actually becoming more and more higher profile, I have a great degree of confidence it'll happen. So,
and who's going to make? Is that GM electric cars, or who's going to make those electric cars?
Everybody's over there right now. I mean, they've got their own players. Right. They've got what is it, Geely?
It's one market that's more open than anything else, unlike the internet.
Yeah.
I'm learning so much here. Monik, yes.
Hi, good morning to all of you. I'm Manik Mehta, journalist. I've been also a fan of yours, if I may say so,
Thank you.
At the Financial Times. But coming back to your remarks on India, the bullish environment, what do you think about two major factors which took place there? One was the demonetization, and secondly, the introduction of GST, I mean the goods and services tax. It has, these two elements have apparently slowed down the economic growth. What's your take on that?
So I think that both of those things were a reaction to the kind of populist politics and the need to I won't say pander, because I think you can make some economic cases longer term for some of these things. I think it was instituted badly. Both of those. Frank's laughing. Yeah, exactly. They weren't rolled out in the best possible ways. But it was sort of a political move, I think. I just think that longer term, India. When you think about where wealth and power is flowing, it's flowing into intellectual property, it's flowing into ideas, it's flowing into the digital economy. I just think India is incredibly well poised already to profit from that. English is a huge factor. Democracy, even democracy that's chaotic, is, I think, a really good thing in a world that is an IP, digital, ideas-driven world. I see things improving slowly. I mean, still it's a country, as we all know, with a lot of red tape and, politics that radically differ from state to state. But I really do. I mean, I would put some money there. I really would.
Can I just comment? We're investors, heavy investors in India, and we have investments in both retail and electronic payments businesses. And if you look at, I completely agree with you, demonetization was handled very badly. It had to be a surprise, but it was mainly driven at the underground economy. And what it did was it drove more and more people into the 21st century with credit cards and digital payments, et cetera, et cetera. It's actually been very good for the consumer. And I think long term will be very good for the economy. Totally agree. It was shifting
to your point, shifting to a consumer economy is what needs to happen.
Exactly.
And that's how you get over the middle income trap.
I actually wanted to ask you, do you think demonetization, forget GST for a moment, but demonetization is something that would be looked at by other places, particularly Indonesia, which has a lot of the same problems?
I do. I heard Oh my gosh, who was the former? I haven't had enough coffee this morning, and I'm going to space it on the former central banker of India, University of Chicago. Rajan. I heard him speak at the IMF meetings, and he was actually saying exactly that this, it may have been done badly, but this is something that could be applied elsewhere. Yeah.
Yes, Grant.
Yes, I'm Grant Ujifus of the Almanac of American Politics. There is the Chinese way and the winner-take-all way. How does that affect the difference between Alibaba and Amazon?
So this is what I'm really focusing my reporting on at the moment. Let me explain the U.S. paradigm as I see it first, and then I'll try and explain how I think what the Chinese are doing is different. Around about 2000 or so, after the dot-com bubble burst, that was sort of a pivotal moment for the digital economy. A lot of companies went out of business, but there was a lot of IP patents hanging around. There was consolidation. A lot of the big platform firms, the FANGs, as we call them here, Facebook, Amazon, Apple, Google, went in and bought up a lot of IP. I think Google, Facebook, Amazon all began to realize at that point that they were really no longer, or very quickly not, going to be so much in the business of innovation as in the business of data monetization. And I would say that this is particularly true of Facebook and Google. Their business model now is really not about churning out something truly innovative, but about capturing as much data as possible and then tweaking it via algorithms to provide hyper-targeted advertising. And that's what Facebook is, of course, coming under fire now with the Russia ads, that, this hyper-targeted and very closed advertising, by the way. When you're being targeted, only you are seeing that ad. So these ads are not put out publicly. The companies don't have to declare political ads, for example, in the same way that print, TV, or radio media would have to. I think that that's going to change from a regulatory standpoint. But they're really in the business of monetizing your data. In that kind of a business, you want to reduce your supply chain costs as much as possible. You want to push back on patent protection. You want to push back on copyright. You want to push back on the kind of liabilities that any other industry, from the auto industry to retail to print, would be liable for. And that's exactly what they've done very successfully over the last 15 years. And in fact, there's been a number of changes in various legal structures around copyright, around patent systems, around the regulation of these industries versus any others. That, I think, now is changing. People are beginning to realize that there has been a real compression of innovation, except for at the very, very top. You really do have, 10% of companies taking 80% of the profits. I hear from a lot of mid-cap firms, a lot of small innovators, that they're really under pressure in this environment. And to me, that's worrisome because I think the digital economy has the potential to really radically increase inequality if it's not managed. But if it's managed well, it has the potential to really share a lot of wealth, because if you think about wealth living in IP and ideas, that should be something that a lot of people could benefit from. So I think that involves, not to get too existential here, but it's a big deal. I think it involves a rethinking of our capitalist structure. And how we think about shareholder value versus stakeholder value. So that's how you would put it in a Western context. Coming to China, obviously, when you have a state that can tell companies what to do, you have more options. And what I see happening in China is that there have been homegrown giants like Alibaba and others. But the quid pro quo that the government seems to be putting in place is that these companies will have to use some of that wealth and power to help grow out an ecosystem, to put in infrastructure, to bring in small retailers into that digital food chain. These are nascent efforts, but I think that it's a positive thing in the sense that you've got to build this larger ecosystem, because when you have a consumer economy, you can't have flat wages like we've had for the last 25 years and expect to have any real growth.
My follow-up seemed to always this morning be one question removed, but I want to go back now to the question about demonetization in India and Frank's follow-up on Indonesia. And another thing, just comparing some of these Asian nations with us, one is struck traveling to many places in Asia these days by the relative, not absence of, but people just aren't using cash that much, especially.
Yeah.
So are we in the United States, I'm not saying it's a good thing or a bad thing, but are these countries likely to just keep leapfrogging by us, and are we going to be one of the last in terms of the big nations to go cashless?
I think that's probably true. I mean, we're behind Europe as well on a lot of things, right, Frank? So yeah, I think we are. I mean, I think that it's typical. We sort of suffer from legacy problems in this way.
Right.
It's the same, in Africa, they go straight to mobile, and then you get, villagers developing apps. So it's easier when you don't have the phone lines to begin with. It's you move on. But yeah, I think we're disastrously behind.
Is that a big problem, by the way, or is
yeah, I think it's one. Go ahead. You say. I think you're closer to this.
I think actually in every economy, and this is a horrible thing to say, but I think it's true, in every economy, most large cash transactions are illegal. And, most people, I mean, how many people in this room carry a lot of cash? You pay for everything by credit. Go to Starbucks, $2.50, and you use your card. And the reason, I mean, I think cash is a huge problem. Particularly in developed economies.
It's interesting. You probably saw Ken Rogoff did a book recently about this very thing. He wants to shift to a totally cashless system for exactly what Frank's saying, to get rid of, to increase tax take and get rid of the black market economy.
Anyone else in the room? You can go again, Mimi. It's all right.
Comment on the cash issue and demonetization. I've been just fascinated by the sort of developments in bitcoins. And I think sort of the idea that, in some ways the monetary world could be flat. This libertarian idea that started in really California, that we can just kind of get rid of hierarchies, and perhaps that's part of the problem that we face in terms of political economy, particularly in the global financial system. So these hierarchies that I guess some of these innovators from California, from Silicon Valley, want to break. But in the end, I guess we do see then the rise of giants, and already know that private banks are using the technology of bitcoins to produce their own products, obviously just for private consumption. So I always find this kind of this, I mean, this is talking very abstract, but, if we are going to envisage a world where it's cashless, potentially creditless as well. I mean, bitcoins really goes to that idea, but that idea has then, become captured by those in the power structures. And, I think,
Well, I am not a huge fan of Bitcoin. I frankly, my own personal rule is if any currency that's not underwritten ultimately by a central bank, I'm not interested in being in, particularly after the last 10 years. So in some ways, I think that the enthusiasm around some of these things, frankly, reflects the cognitive bubble that Silicon Valley lives in. I mean, it is pretty 35,000 feet off the air out there.
Speaking of, yes.
Rana Yoshia with Asia Society. Could you comment a little bit about J-Coin? So J-Coin is a Japanese virtual currency also, but they claim to have learned the lessons that Bitcoin went through, and they're pegging this coin to the Japanese yen. And what do you see as prospects for that currency?
I have to plead ignorance. I have not followed J-Coin, but I think in general, I think if it's being pegged to an existing monetary system, that seems a lot better to me than having something that's just sort of free floating. Frank, do you know anything about it?
Just a comment on Bitcoin. I mean, the concern I have is that it's not traceable, and so it's actually being used for blackmail. There's a huge amount. If your computer gets taken over, which happens regularly, that's how you buy your way out of it. And corporations are paying ransom by Bitcoin, and that's the only currency that the bad actors will accept. So until Bitcoin, and by the way, I don't believe we'll ever have a creditless economy. I think if you do have virtual currencies, there will be credit cards associated with them, because it's got, it's just a huge engine for the economy. But I think virtual currencies are, probably going to be very common in the future, but I think they've got to be, as you say, tied to a reputable institution issuing and tracking.
So here's a 35,000-foot question. You've used the term tech ecosystem many times this morning. I believe you said about China, doing what they're doing is made a lot easier in a, quote, autocratic system. But I wonder if you have some reflections, big picture, small bore, as you like, about, so a tech ecosystem in that, as you say, in an autocratic environment, tech ecosystem, Silicon Valley, where they're all, I don't know what your phrase was a moment ago, but they're just in their bubble,
Cognitive
perhaps,
bubble,
right?
yeah.
And then tech ecosystem in what they call the Silicon Alley or coast in India, where it seems, and I'm not that familiar with it, but almost like a free for all in a wonderful way. I mean, what works and why in these various? I mean, I guess that's a subject for a book, probably those three places.
Indeed,
right?
It's the subject
That's
of my next
one.
book that I'm reporting right now. Well, I mean, I think all these are great experiments, and we don't totally know what's going to work. I think that the advantage to the Chinese system is that you can kind of step back and say, okay, who are the players, and how do we make sure everybody gets some slice of this pie? The disadvantage is also the control, right? Because if you move in a digital economy, if you move to too much censorship, to a splinter net, as they call it, this kind of fragmentation and balkanization of the way in which the internet gets regulated, which is already happening and is a big concern because Europe is going one direction, the U.S. is going another, and many of the Asian nations individually are going in their own directions with regulation. So that starts to then become a hindrance. It's almost like a tax that you would put on your own digital economy. But in the U.S., we have market forces that really are not working well in the sense of creating wealth for society at large in the tech ecosystem right now. And just as a comparison, the Facebooks, the Googles, they have huge market caps, but they create exponentially fewer jobs than even the previous generation of tech companies like a Microsoft or an Apple or an IBM, let alone the GMs or GEs. So you've got the jobs problem, you've got the tax problem because it's so easy to offshore IP. If you look at the effective rates that these firms pay, and you're seeing Europe up in arms about that now, it's much lower because you can locate ideas wherever you want them to live. So there's that issue. And then there's the issue of their interests, which are basically to cut the cost of their own supply chain and cut the cost of intellectual property and be able to ring fence data. And you've got monopoly and antitrust problems, which again are coming to the fore. I think the regulatory environment is going to change. And here's just a little sort of speculation. And I'm curious, Frank, you can tell me if I'm being too cloak and dagger, but the Chinese stock market, the MSCI index, led by China, recently got a kick up right around the time that there were talks about regulating the big FANG companies in the U.S. And I thought that was interesting because tech is leading the Chinese markets, and I thought maybe investors are hedging here and trying to figure out, a little bit of which of these systems is really going to be the one.
Yes, investors do hedge, and yes, you're being too cloak and dagger.
Okay, very good. Fair enough.
It was fun, though, for a moment. Our time is... Okay, we'll take one more, and then we'll wrap. Please.
I'm Miao from Confederate, and given your depth and in China, in Asia, and broad global view, I'm curious to see from your perspective how global business are doing in Asia, in China. We talk about hardship criteria, and from our service point of view, we've seen declining business growth for MNC, challenge of local competitors, and also brain drain of executives coming back home. And just from your perspective, how do you comment on this market and who are the winners and losers?
Well, that's what I hear as well. And speaking particularly about China, I think there was so much interest so early on, so much build out, particularly from some of the retail companies, that there was bound to be kind of a correction in that. And also I think that some of the moves you've seen where players are invited in, and then the rules change on the ground, and more strategic sectors, more of a sense that the state wants its own players to be the winners. I actually had an interesting conversation recently, 2 years ago maybe, with a Danish green energy company that at the time was the number one player in its sector in China. And I was asking the CEO, so how do you think you're going to do in the next few years? And he said, I think we're going to be the number 4 player. And I was like, the number 4? First of all, that's really specific. And second of all, like, why? He's like, well, that's what we've been told. We're going to be the number 4 player. So, I think executives feel that's what they're dealing with. I think that, though, that's actually expanding interest in other Asian nations. I think, I go back to my point about India. I think that China may have, had a little bit of a peak and maybe getting a bit of a correction. But some of the other emerging markets with good fundamentals are becoming more interesting.
So we will close there. Just a couple of notes before we do. First of all, I mentioned all those dates at the beginning. So again, the next iteration of the Asia Briefing will be on the 8th of November at this same hour. And we will do that double-barrel look at the Chinese Party Congress in plenum with Elizabeth Economy here and Orville Schell joining us from Asia by remote to talk about President Trump's trip, which will just be getting started in Asia. That's then. I should also mention, for those of you who plan a little further down the road, on the evening of the 13th of December, we do, some of you may know, a forecast program where we look and have a little fun with a crystal ball approach to issues facing Asia in the year to come. We eat some humble pie to see how poor our predictions were about the year before. But I mentioned that not only because of the date, put it on your calendar, but Rana Foroohar is going to join us. You've not done one of those before.
No, I don't think
so. You better come with some serious speculation.
Okay, good.
That's the 13th of
Get
December.
my cloak and dagger.
Rana's books are at the back, and the web post for this event will be up a little later today if you want to share it or refer back to it. Thank you all for your engagement. Thanks those online for joining us. Frank Brown, thanks for your engagement. I feel you were practically a panelist here, and I appreciate it.
Totally, well deserved.
And but mostly, Rana, I have to say, you may have wonky DNA, but you certainly have a gift. CNN knows what it's doing of delivering things that might be wonky in other settings in a very in a way even I can understand. So I appreciate it. Thank you all. Thank you very much.
Thank you. Thanks. Really nice to see you. Thanks.